So in the past 7 days, Ethereum has shot up all the way from about $2,600 to hitting a high of $3,400, and now it's currently sitting at $3,172. Of course, this is one of the most popular blue chip assets and a ton of people are bullish on it. And today I'll be showing you how you can possibly get very high APR on your Ethereum. So we're going to be using a business model called liquidity mining. Now, if you don't know what liquidity mining is, or if you don't know what liquidity pools are, I'll explain it really quick. So if you go to a decentralized exchange such as Uniswap and you go to swap one asset for another, you'd basically go to swap and then you would type in the two assets. So say someone wants to swap Ethereum for Aave. Say they want to swap 0.3 Ethereum, they'd be getting 5.4 Aave. Now, when you go ahead and make this trade, or anyone who makes this trade, they would have to pay a fee. See right here, it's saying it's a 0.25% fee. A really cool thing is that a percentage of this fee gets paid out to the people who are providing liquidity to the decentralized exchange. So if I go ahead and provide liquidity to the decentralized exchange, I'd be getting paid out a percentage of this fee. So you can just think about how much money is getting paid out every day in fees, since there are so many trades happening every second on the blockchain. If you go over to the website DeFi Llama, go to yields and click pools on the left, you can see a lot of liquidity pools, but on DeFi Llama alone, you can't see too much information about these pools in the pool's history. So I like to use another tool called Metrics Finance. Just type in metrics.finance and click enter. And if you're excited for me showing you how to get the highest possible APR on Ethereum, make sure you subscribe and click the bell to turn on notifications so you don't miss an upload. So I'm going to hit launch app and then I'm going to go to the discover section at the top. Now, plenty of these features I'm showing in today's video are available on the free version of Metrics Finance, but many of them are only available on the paid pro plan. Now, if you click the link in the description down below, you can claim a free 30 days of the Metrics Finance software for the pro version. So definitely take advantage of that link in the description. Now, since this video is about Ethereum, for the select network section, I'm just going to only have Ethereum checked. For exchange, I'm going to go ahead and select Uniswap, QuickSwap, PancakeSwap, and we can just select SushiSwap, Orca, and Radium. Now, it's going to show a ton of pools. There's 548 pools to choose from. Obviously, that would be too hard to sort through all these one by one. So I want to go ahead and filter it down to the best possible opportunities for my investment strategy. Basically, I want to add some filters that would show pools that I may be comfortable taking on exposure to. So first of all, I'm going to set the TVL higher than 2.3 million. Now, this is only going to show pools that have a TVL over 2.3 million. One reason to add this filter is to try to filter out some of those meme coin pools or those pools that have coins with low market caps. And another filter I like to do is the fees APR. So I like to put in pools that have higher than 10% APR and lower than, let's just say, 85% APR. Because if you don't add this lower than section, if you just say, for example, lower than 500%, there can be some pools that have very high APR, very high, like 412, 407%, but these are meme coin pools. And again, I don't want to look at these meme coin positions. So I'm going to go ahead and I'll just do 85% for the sake of this video. So right off the bat, we see wrapped Ethereum to Matic over on Uniswap. This is a TVL of over 12 million. That's a good sign. Typically, I like to look for pools with a higher TVL, so hopefully the returns will be more consistent. And it says it's doing a 80% APR, and that can be higher depending on our range. So I'm going to go to the right, hit simulate, open it in a new tab, and now we can check it out. First thing I like to do when I look at a new position is scroll down and look at the volume history, hoping it's somewhat consistent. Here, it's not looking the best. We can see there's some pretty low volume days, 37K. Here's a 40K day, and then here it spiked up to 800K. This is a red flag to me so far. Usually I like to look for pools that have every day and having volume over $100,000 or at least like $80,000. So I'm going to go ahead and close this one. I'm going to go ahead and sort by TVL. So I'm going to click TVL at the top, and now we're sorting by TVL. Sweet. So now we see wrapped Ethereum to USDC. It's saying it's doing 30% fees APR with a TVL of 470 million. Obviously, this TVL is much higher than the last one. We can go ahead, click on simulate, open it in a new tab. Great. Now let's scroll down to the volume history again. So the past week is having way more volume, but even on the low days, it's at over $30 million in volume. So this is all right for me. It's not as much of a red flag as the last pool. And on the pro version of Metrics, you can also see how correlated these assets are. You can see that here. Anyways, so with this current range, we'd be getting 30% APR. Let's go ahead and change that. I'm going to move my max price a bit to 670, and then I'm going to do my max price at 3,719. Now it's saying almost 45% APR. Now around the election, November 6th and November 7th, there was a big change in the chart. So basically putting my range off of this data. So my calculation range really should be like 7 days because I'm using this data. So now we can hopefully see a more accurate return. So I'm going to change my max price and min price a bit wider. And now it's saying 76%. Now that is pretty sweet considering it's USDC and wrapped Ethereum, but this range is pretty tight. So it may be safer to go out a bit more, less narrow, if you are trying to be more of a passive investor. And by that, I mean not having to check your pool all the time, not having to rebalance it, not having to look at a screen a lot. So it's more of a more passive strategy. So the next steps would be is make sure you're okay taking on exposure to USDC, and then do your due diligence on wrapped Ethereum. Make sure they're positions you'd want to take on exposure to, and find your range. Make sure the range is all set in numbers that you're basically, and make sure that you're comfortable in the range that you have selected. And then you'd save it to your portfolio in the top right. Remember, I'm not telling you what you should or shouldn't do with your money. I'm not a financial advisor. I'm just giving you my opinion on these cryptocurrencies. There is risk to this investing, such as divergence loss, so do this at your own risk. All right, let's look at some other opportunities. We have wrapped Ethereum to Uni token with a $51 million TVL, and the fees APR is at about 54% right now. I did a video on Uni token recently, so you could go ahead and check that out if you'd like. But now I'm going to go ahead and simulate this in a new tab. I'm going to set my sample deposit amount at $10,000 for the simulation, and I am going to first adjust my max price. So I'm going to set it about here. Min price is pretty tight. I'm going to drag it down to here. Now it's saying we're getting 66% APR. The min price is 277. The max is 423. And to hopefully get a more accurate representation of our APR, I'm going to lower the calculation range just a bit. Let's go the last 10 days. And now it's saying we'd be getting 120%. Now you can see the volume history changed a ton. So that 120% might not last too long, but it still may stay pretty high, just maybe not at 120%. Because you can see on the 4th of November, there was $1.66 million in volume. But on the 12th of November, yesterday, there was over $30 million in volume. So this possibly could be inflating the APR, but nonetheless, you still could be getting high APR in this position when the volume is a bit lower. You can also see that these assets are 82% correlated according to this correlation right here. And yeah, Uni token is pretty interesting. I covered it in another video. For example, when you have Uni token, you can vote towards things for the Uniswap ecosystem, but there's so many whales holding so much Uni that even if you have $100,000 worth, your vote probably wouldn't matter much. It wouldn't make a huge difference in the scheme of things. That's just something to be aware of. But the next steps here would be to do your due diligence on Uni and wrapped Ethereum and see if you want to take on exposure to it. And a great way to do this is go ahead and go to CoinGecko. You can type in Uni in the top right, and then great, it's going to bring you to Uniswap, and you can see the price history, you can see the market cap, and you can scroll down and go to their website so you can read more about Uniswap and Uni token. What's weird is that these websites are just going to Uniswap, not to Uni token. So make sure you find the Uni token website when you're reading about the Uni token. Moving on, we have Solana to wrapped ETH over on Uniswap, and it has about 20% fees APR and $17 million in TVL. I'm gonna go ahead and simulate it in a new tab. This could be interesting for me because I am bullish on Solana. So let's take a look. So scrolling down, we can see the volume history. We can see that it's pretty high starting November 10, and it had some pretty low days, but the low days are still over $1 million in volume. And this one is 84% correlated. And let's go ahead and check out our range. If we go ahead and set our max price, see how our numbers are 0.07, like a strange number? We can go ahead and hit the swap button in the top left, and it will swap the order that the assets are in. So now we can go ahead and get normal numbers like 20.2. So if we set our max price to like 18, or maybe even a bit lower, like 17.6, then our min price to about 13.5, it's saying we're getting almost 37% APR, which is solid. So if we had a $10,000 deposit amount, that would be $3,647 per year or $300 per month according to the simulation. So the next thing you would want to go ahead and do is do more research into Solana, see if you'd want to take on exposure to it, and wrapped Ethereum, of course, but we went over that already. And then you'd save it to your portfolio for later. Here we have wrapped Ethereum to Aave. It's doing about 35% fees APR, almost $15 million in TVL. We can go ahead and simulate this one quickly. So max price, say we want to set it to about 20, maybe 19, 19.8. And then our min price, move that up a bit to about 14.5. It's saying we'd be getting about 57% APR. That's a lot. Now scrolling down to the volume history, we can see that there's a lot of volume ever ever since around the election. So this APR may be pretty inflated. In the long run, the APR might not be this high, but for now, it's displaying a pretty high APR. Remember, there is a link in the description to claim a free 30 days of the pro version of Metrics Finance. So go ahead and take advantage of that today. Comment below what your struggles are in DeFi so I can make a video about it, and make sure to subscribe with notifications on, and I'll see you in the next one.